Hi, welcome back. Sorry, it's been a busy few months, so I have not been able to make any videos. But I've been doing some weekly option selling in terms of iron condors, and I wanted to discuss what I normally do and what is my profit, etc. So I'll start with the latest weekly iron condor that I have been selling. Today is the 19th. I had sold a weekly iron condor for the 18th of Feb. So I had sold it 1 week before, which comes on the 11th. What is an iron condor? Iron condor is nothing but a triangle, which means uh, sell a CE at the top and sell a put option at the bottom. But we don't want to leave it unhedged, which means naked. So I buy a put option and I buy the call option. So let's say if I sell this for 20 rupees and if I buy 5 rupees option, the same here, if I sell 20 rupees put and buy a 5 rupees put, then the difference 15 rupees and 15 rupees is going to be my profit, because for every lot my total profit will be 30 rupees and the lot size for Nifty is 75. So that gives us 2250 per lot. The approximate margins required are about 55,000 to 65,000 rupees, 3.5% per week, which is great, which is what I want. Um, just to give you a bit of background, I am a part-time trader, so I cannot sit in front of the screen all the time. So what I do is I do these positional strategies where I initiate for a week and I only take some time at the end of the day to check and make any adjustments. Okay, now let's go back to what the setup is. So I initiated it. Today is the 19th. This is Thursday. So this is Wednesday, Tuesday, Monday, Friday. This is the previous Thursday. This is 11th. So when I initiated it, I wait until the end of the day to initiate it. When I initiated it, Nifty was about at 15,150, right? So this is my Nifty spot, which is 15,150. So when I was looking at options, I want to sell quite far off, because if you look at the trend, the trend is very, very bullish. Let's know that we don't know what is happening. Okay, so let's consider that we don't know what is happening. This is all we have, right? So if you look at this, I am thinking that the markets are consolidating, but if you take an average of the previous week, which was very trending, the approximate movement even at this trending market is about 15,150, 15,750 to 15,150. Sorry, 14,750 to 15,150. That is a move of about 400 points. So I'm thinking even when it's trending so much, the move was 400 points, and I want to sell something that is at least 400 points away. So 15,150, want at least 400 points away, which is 15,550. So I sell 15,600 call. Now at the downside, I want to be as safe as possible. There is some sort of previous resistance at 14,750, and there is one more resistance at 14,600. So I am thinking that 14,600, which was the previous resistance, could to be a good support. So as you can see here, the distance is quite far. The distance here is 550 points in the CE side and 450 points, sorry, 550 points in the PE side and 450 points in the CE side. So, and the next is I want to hedge it. I always hedge with 300 point wings, which means I will sell this call option and buy 15,900 call option. If I sell 14,600, I buy 14,300 put option. So that is our iron condor now. So I've sold 14,600 and bought 14,300, sold 15,600, bought 5,900. So this is my current iron condor. So let's see slowly what happens. As you can see here, I will show you what I have done. It's my futures and options. Want only realized, and I want only the previous week. So I am starting from 11th. Let me start from 10th to 19th. Okay, just looking at the previous week. But I don't want all of the other options, all of the other profits. So I will open this. Okay, and I will filter this to include only the NIFTY 2021 Feb 18th options. So you can see here I have sold 14,000. I actually have sold 14,500. I've made it even more safe. I've sold 14,500 here. Okay, so let me, okay, so what I have done is I've sold 14,500 and bought 14,200. So let's see where I have bought it and what the price is. So if you look at this, my price is, let's calculate the price. I've bought 900, I've sold 900 quantity at a value of 18,285. So this is sell value by quantity. I've sold it at 20 rupees. I bought the hedge for 1.95. Okay, and the call option I have sold for, oh, okay, sorry, and this should be buy value. I bought options, right? So this I bought for 10 10. Okay, so this is my iron condor now. What have I done? I have sold for I have sold a call option for 16 rupees, bought a call option for 3.8 rupees. I have sold a put for 20.3, bought for 10 rupees. So my net, I expect 10.3 rupees and 16 minus 3.8, which is 12.2. Think so, yes. So 12.2 rupees. Totally, I am expecting 12.2 plus 10.3 times I've sold 900, so I'm expecting 20,000. Okay, I will come to the capital later. So 20,000 I'm expecting. So let's see what the markets have done, and I will show you what adjustments I made. So this is what I have done. Now the markets the next day were okay. The markets are still at the same level, no problem. The next day you can see that the markets have gone up. Yes. The markets have gone up. So my put option would have been in profit, my call option would have been in loss. Again, the markets have gone up. So if I take the hourly chart, I've sold my options here. So you can see here that when the market moved up, my call option would have been in a loss. So what I did was, because this, what I did then was I did two things. One is I closed my 14,200 put, 14,200, 14,500, that put leg, and I opened 14,700 and 15,000. What did I do that in? So I closed these two, okay, with a profit of 8,000 rupees, with a profit of 8,000, and I opened 15,000, 14,700. So 15,000, I am still playing very safe, 15,000 and 14,700. Then what the markets did, so but the market still continued to go up. So I was quite worried at this point, not worried, but I wanted to play it safe. So what I did was I also initiated a put spread, sorry, a call spread. I bought 350 call, sold the 400 call. So in case the markets move violently up, this will be able to save me. You can see here I made a profit of 191. Now I also, because I was worried that it might go up, I sold 15,200 put. So at this stage I sold the 15,200 put, thinking that if the markets go up, this put will save me. But I did this intraday. When the markets gapped up so much, I sold this 15,200 put. But the market slowly came down. And sort of have made a red candle that day. So what I did was I had sold only 150 quantity, two lots. So I booked my loss that day about 1,200. Think about it. I am worried about 20,000 rupees options. So it doesn't matter if I lose 1,000 rupees. So, but the next day, the Nifty came down. It started coming down. It started coming down. At the end of, on the 18th, as you can see, Nifty closed almost flat. We started at 1550 and Nifty closed here 15,101 something, close to 15,100, maybe 120. Okay, so even this violent move, I was able to, it started here, right? So from here it went up. What did I do? I rolled up my put to here. It came down. When it came down, when it went too much up, again I sold three lots here. Sorry, two lots here. Put. So when the put came down, when the market started coming down, I closed the put at a small loss, which is 1,200 rupees. Then the market slowly started coming down, but by then the time value had greatly reduced for the 15,000 put, right? So this was also in profit. When it started coming down, my calls also started becoming in went into profit. So during the last day, there was very little that I had to do. So if I go back to my profits, so you can see here, this is my first original put leg. This is my call leg. I have not changed the call leg at all. I have just let it be. I have been rolling up my put leg. Okay, and then I sold this option intraday as a hedge. So you can see here, overall the total realized profit is 27,210 because we had rolled. So think about it. So 27,210. So the quantity that I've used is 900, which is so 900, which is 12 lots. So if I take per lot is 65,000 rupees. So this gives me a capital requirement of 7,80,000. This is the total capital that I've used for both the legs. So if I think about it, this is my profit and loss, 7,80,000, which gives me a PNL of 3.5%. However, this is this is my total profit on capital used on the margin, but I used 10 lakh of total capital because after this I added a couple of lots. I added 3 lots after that, so it took up additional margin. So I saved 10 lakhs for this strategy. So my profit and loss has to be calculated on the 10 lakhs. So 10 lakhs is 2.7% in 1 week. Okay, given that the markets have moved so much, even though the markets made a V shape move, we still were able to end up with 2.7%. So finally, I also want to tell you, always know your loss, because risk management is very important. So my max loss will be 300 points, could be either side, right? So my max loss is always defined. So per lot, I might lose 300 times 75, which is 22,500. How much am I going to gain per lot? 2,250. So this is about 2,250 profit if the market just violently moves up or down, and if we don't do adjustments, then we might lose 22,500 rupees. But because we do these adjustments, the probability of profit is much higher. Also note that this is a positional trade, which means I've taken one trade, which is iron condor. Then the second is roll PE up, right? The third is add 2 lots of PE plus call spread. So yeah, I've totally done only 3 sets of trades. One day on the actual iron condor, which was on the 11th. Then roll PE up, I did on the 15th, and this I sold on 16th. So I've done only 3 trades. This is very important to me because I am a part-time trader. This is what I've seen, that I am looking for strategies that will help me have consistent profits, but without as much intervention. Hopefully you like this video. I'll continue to update you guys on how this goes over time. Alright, catch you guys in another video. Bye.